guys, and welcome to Midweek with Indiacharts. This is Muskan Kapoor, your host, and I'm joined here with Jay Vora. We're catching up together after a very long time. We've actually been away. Jay has been helping and working on the analytical tool Rohit sir has been talking about lately. So he's working on the app, the interface, and it will be yours very soon. The tool that we're building. You can see everything, all the analytics that you need under one platform. So we are hoping that this project completes really, really soon. Jay, do you want to add something to it?
Yeah, so we are working tirelessly on it, and hopefully we should be able to pull it off by this month end. Let's see. Let's hope for the best.
Correct. Let's see how Nifty will pull off by the end of this month as well, coming back to our analytics that we do. So, yeah, we will just dive right into the questions. So, the first thing that I want to know is about the US data. So, since the past few weeks, we are seeing that the US economy still looks strong. But when it comes to the inflation, it doesn't seem to be going away. So, what does this mean? Does this mean there are going to be more hikes? How is US going to handle this?
Right. So, in the past few weeks, particularly, if you move back a bit, then the inflation data was showing signs of cooling off, and all the readings were coming down. So that was giving us some comfort that the inflation is cooling off, and probably what the Fed is anticipating, it is going on that lines, and ultimately it will cool off. Okay, so that was the belief which everyone had on the street. But specifically in the last couple of weeks, the data which have come, now is it one off, or is it a start of a new inflationary trend, is something that people are still figuring out. So I think the CPI data was marginally above the expectation, but the hottest of the data was the job roles. I mean, the non-farm payrolls. I mean, that had gone, completely off the expectation. So I think the expectation was somewhere around 1,80,000 or 2 lakh kind of job addition. But against that, there was some 5 lakh plus job addition. So that was a significant beat. So now whether that was a one-off or no, we need to see. We need to see how the data is how the data come by in the forthcoming weeks. But apart from that, the personal consumption expenditure, even that had gone up. That was the PCE. Then the PPI, the producer price index, that had also come above the expectation. So the general feeling is that, especially in the past few weeks data, it is like that the inflation is, again, trying to inch up. Now the issue is that, again, there has been some escalation between Russia and Ukraine. Okay, so now that is renewing the fear of that inflation. That are we going to get the next leg of inflation in this period? So we need to see how things play out. But going by what Fed had said, so in fact, when the inflation data was cooling off as well, okay, the Fed had stick to its gun, and they were telling that we see the terminal rate to around 5.25. So they are on course to doing that. Okay, so even while the inflation data was cooling off, they didn't budge from the target. I think that even this might be seen as a one-off, and they would want to see more data, before concluding anything. So to get to 5.25, I think more 50 basis point are still pending. So whether they do it in one shot or whether they do it 25 bips in next 2 meets, that needs to be seen. But it seems like the end is somewhere over there. But right now, because of this hot data, the market is anticipating that the terminal rate could inch higher to 5.4 or 5.5. Now, again, like I said, that this everything will be data dependent. So if the data which we saw right now was a one-off and it again starts cooling off, then I think 5.25 is where Fed might want to go and keep the rates higher over there, and then see how things are unfolding. So that would probably be the commentary, I'm guessing. But let's see what Fed has to say, because in the good part is that in the past few Fed meets, Fed has been very explicitly telling what they want, and markets are anticipating that they will pivot, they will stop raising rates, but they are sticking to their guns and doing what they are saying. So we would want to hear the commentary what the Fed says, and we will then see what are the takeaways from the speech.
Yes, so we will wait to conclude this clearly after the next Fed commentary. Moving on to my next question. So, for the subscribers, we highlighted that FII's net short position is the second highest in this 1 year. So, what does it mean for the key indices? What are the sectoral setups? If you could explain those to us.
Sure. So, I'll share my screen.
Okay.
So, yeah. So, this is the one which we had actually highlighted today in the morning. So you can see the green line over there. This is the net position of the FIIs in the index future. Okay. So this is the midline. Okay. This is the zero line. And typically when they are short in excess of 1 lakh around, okay. Earlier it used to be 80-90,000. So that is why I have a line over there. So if you see over here, so somewhere around 80-90,000, whenever they used to go short, there used to be short covering. But in extreme situations, there has been reading below the 1 lakh mark as well. So as we speak, as of yesterday, there was 1,31,000 contracts, and this is the second highest reading, after June bottom, which we had seen. Okay, so the June bottom reading was somewhere around 1,46,000. And prior to that, that was around the October low. So the reading over there was somewhere around 1,27,000. And this time around, it is 1,31,000. So this is the second highest reading, and we are, looking for a reversal now, because over here, as you can see that there is 1, 2, 3, 4, 5, 6, 7, 8 consecutive negative close. I'll have to search where I have seen, such pattern occurring. And also, many of the people have highlighted on their Twitter as well, and, on various social media, that whenever there has been a big correction, you haven't seen a correction for more than 3 months. Okay. You can see over here, it is sorry. So you can see over here, it is 1, 2, 3 months, and then, the Nifty has gone up. Over here as well, it was 1, 2, 3, and the Nifty has gone up. So most of the time, whenever the corrections have come about, it has been not more than 3 months. Okay, 3 consecutive months, let me say that. So right now we have seen 3 consecutive months of, negative close. So again, even that is favoring for an up move, at least in the near term. So if we look at the setup, essentially what we are seeing is that there is an extreme short position. Now, typically, whenever they start covering, you can expect them to come back to the zero. And if the trend is bullish, okay, then the reading can even go to 1 lakh plus. Okay, so that is how, typically you would see their behavior. See over here as well, when it was in oversold, they covered their short and they went up and they went the long position up to, I think, 60-70,000. Okay, that is where we got a top over here. Then later on again, when they were bearish, they came down to this level, and then we saw a rally towards the new high, and that is where their positioning went to another extreme. That is, it went to 1 lakh plus. Okay, so now again we are seeing this extreme reading. Now the funny part is that we have not seen a short short position, holding on to those extreme levels for a long period of time. Okay, so this is where they have been holding long for a while. So does it mean something else? We don't know at this point of time, but we would purely focus on the chart. Okay, so over here as well, there was an extreme short position which we had highlighted, post which we got a pullback, but it was not that great. Okay, it was not honestly as much as we had expected, but we got a pullback, and now again it has come down. So now the expectation is that again there will be an up move, because this short needs to be covered, because despite shorting so much, okay, the Nifty index has gone down only this much. I mean, it is barely, I think, 10% or so from the top. So that, I don't know. I mean, I think that if there is a positive global cues, which possibly is there for the Asian indices, okay. If you see Asian indices in particular, they have been pretty resilient. In fact, the European indices have made a new high. Okay, it is only because of this data. The the US markets have not performed that great. Okay, but apart from that, all the other markets are doing well. So if there is some support from the global indices as well, then we can definitely see a short covering. Now the whole question is that, do the shorts cover only till here, or do they form an extreme position and move towards the other end? So for that, obviously this trend line will be very crucial. Okay, so the break of this falling trend line would lead to that sort of extreme positioning on the other side by the FII. So that is one thing that we are watching very closely. And apart from that, if we actually see the setup, so I'll use the other software, because this is the end of day chart and today's price action is not captured in that. But see, if you analyze the Nifty index, okay, forget the wave counts for a while. So everybody knew that, I mean, we had highlighted that something is complete over here. Okay, and after that we have been into this corrective phase. So the Nifty index had broken out from this trend line. Okay, so somewhere over here it gyrated a bit, and then eventually it saw a breakout. And now is this the retest of this trend line? Okay, that is what is something very interesting. And apart from that, there were some fears that the Nifty index will break the 20-month moving average. Okay, but the 20-month moving average is once again saved for this month. Okay, so as I said, that if we go by the history, more than 3 months the down move has not sustained. Okay, if that is the case and we get a positive monthly close, then again the monthly averages will be saved. Okay, if the monthly averages is saved, then it is not necessary that the RMI will complete its pullback cycle. Okay, so it can very well do something like what it had done over here. Okay, it can remain, I mean, it can keep whipsawing and it can keep staying above the zero line without completing the cycle, and yet the index can keep inching higher. Okay, now one more similarity which I can possibly see is that this phase. So let me zoom in to that phase. See, in this phase, what was happening was that if you see it on the lower time frame, okay, this phase. So after this sharp correction, okay, the idea was that maybe there will be a pullback and there will be a correction. Okay, but nothing of that sort happened. In fact, the correction which ended up happening was more of a time-wise correction in which the index kept inching higher. Okay, and over here as well, in not, I mean, in the index or in the stocks, many were being very sideways only. So it was actually not very easy to see an impulse move or an clean up move during this phase. And that is why it was, I mean, there was always a fear that some had this fear that this was a rising wedge pattern. Now rising wedge pattern is generally a reversal pattern, okay, after which we see a big decline. But all this ended up happening was a running correction. Okay, now because this was wave 4, what we say in elite wave, that is, this is 1, 2, 3, wave 4 and wave 5. So because it was wave 4, so the running correction typically happens over there, and that was an ideal place. Okay, the only thing is that post COVID, okay, post COVID actually this has been a new up move, which means that this possibly is one of something. Okay. Now, only, I mean, there is a lot of debate on this wave count as well, whether, this is 1, 2, this entire 3, 4, and 5. Is it something like that, or something new has started from the pandemic low? I mean, that is a different debate. We'll keep it for another day. But the major point is that after this correction, okay, there is a chance because the Nifty valuation as compared to the other indices, other global indices is high. So we end up seeing a sideways sort of correction. So in this case, something of this sort can happen. Okay, that cannot be ruled out. And it might not actually be triangular in nature, but it might end up happening W, X, Y, X, and Z. Okay, something that sort of is a possibility, because, to be very honest, whatever could go wrong in last 1 year has gone wrong. Okay. Despite of that, the Nifty index has held on very well. So that firstly is telling us that the Nifty index is way too resilient and may not necessarily correct as much as we anticipate. But that doesn't mean that we cannot see a sideways sort of correction. So that is a distinct possibility. But like we had mentioned in the previous recording as well, many of the stocks, if you see, have corrected 50, 60, 70% as well. Okay. So over there, wherever the fundamentals are favorable or wherever the patterns are visible, that is where people can start nibbling in. Okay. And in that sense, like I had mentioned earlier as well, that there is no doubt that once this corrective phase is complete, okay, there is a next big up move that is still pending. That I think there is no debate on that front. So the overall idea is that because the correction is now almost, I think, 17 months old. So typically the correction, lasts for 15 months to 18 months, and we are almost getting over there. Okay. Right. So it is time to be constructive. Okay. And if we dissect and if we look at it on the lower time frame, then we can see that the Nifty index has come back to the lower band. The pullback cycle is complete. Okay. The monthly average is held. Okay. This is all a good sign. And I mean, this is ideal environment for the Nifty to inch higher. Okay. Now, whether it does or not, that needs to be seen. But the environment is good because the sentiments are extreme as well. Okay. Now, if you see other sector indices, okay, like Bank Nifty, that particularly has a very good setup because the bands are narrowing. Okay. It has come back to the 40-week average or 40 weekly exponential average. It has again completed the cycle. Now, when you go to the lower time frame, there has been a bullish crossover just in today's trading session. Okay. So this is also telling us that that a positive move is likely in the days to come. So the hurdle in the near term would be the 20-day average and the 40-day exponential average. I think once these two hurdles are taken out, and the level, I think, for the 40 exponential average is somewhere around 41,318. Okay, so I think 41,318. Once that level, I think, is taken out on a closing basis. So obviously this is a dynamic level. Okay, the more days Bank Nifty will take, this moving average will keep coming lower. Okay, because in last 40 days the trend has more or less been down. So once this level is taken out, that is where a positive environment can kick in. Now, whether this is a big reversal from the medium term perspective, or this is just a bounce of this entire decline, that needs to be seen, and that will be figured out once the pullback unfolds. But as of now, the environment is conducive for it to start a new run. Okay. Now, this was one of the index. Now, if you see BSE Auto Index, BSE Auto Index has barely corrected in this entire correction in the Nifty index. It has literally been sideways. So now this tells you that the BSE auto index is fairly resilient. Okay. Now, even if you see, there has been an impulse move over here. So this is 1, 2, 3, 4, and 5 over here. It was wave 3. Then this is wave 4 correction. This is wave 5. So this entire sequence is a 5-wave rise. Now 5-wave rise has happened, and then there has been this sideways correction. So this tells us that once this correction is complete, a new leg of up move is likely to play out. Then if we see Nifty PSU banks. So PSU banks have been hit hard because of the Adani saga that has come by. But if you purely see the chart structure, it has come back to the weekly averages. It has come back to the lower band. Sorry, this is Nifty bank, Nifty PSU bank. So if you see the PSU bank, it has almost come back to the averages, and it has completed the pullback cycle as well. And if you see on the daily chart, even today over here as well, there has been a bullish crossover. So again, the 20 and the 40-hour average, 40-day average will be the near-term resistance. Once that is taken out, there can be some positivity in the PSU banks as well. So like that, there are many of the themes that are emerging. In fact, if you see the BSE PSU index, this I think Rohit sir has also highlighted many times. Yeah. So this is the one. So if you see if you just zoom out and if you see the monthly chart, but I'll just remove the bands. So you can see that there has been a big consolidation, or you can say congestion over here. Okay. So once this entire congestion is taken out on the upside, so there could be a massive run, because for last almost 14 years, this index has done nothing. Okay, so this tells you that once the breakout does occur, so there can be a lot of positivity in this index as well. So that should be closely watched. And I think apart from this, yes, the BSE Capital Good Index, that also sir has mentioned many times. This is very much similar to what PSU index saw. Okay, it is just that it is a little in an advanced stage. So you can see that over here as well, there has been a multi-year or multi-year breakout, and since then, it has been rising higher. In fact, even if you go and you see the lower time frame, you go and you check the weekly chart, it is well trading above this averages. Even if you see the daily chart, okay, if you see the daily chart, this entire has been a consolidation. Okay, so you need to wait and wait for the breakouts in this. But again, this is also one of the sector which has been resilient. And in fact, many of the stocks have been are doing its own thing only. If you see stocks like Siemens, so again, this is not a stock recommendation, but I'm just trying to highlight that in a strong sector, the stronger stocks are doing very well. Okay, so while we saw that the capital good index has been sideways, but a stock like Siemens has been moving higher. If you see stocks like Cummins India, that has been inching higher. So find for the stocks which are strong, which are resilient, within the strongest sectors. That is where a good money can be made in the days to come.
Correct, makes sense. I did understand how we did have a leg of correction that came in, and now it looks like things are clearing up. Again, we would need time to confirm as to if they are clearing up for a good period of the short and medium term. So
Correct.
yes, we will be coming up and telling you all about whatever we know, however things keep moving ahead. Yes, thank you so much for the session today.